Hi and welcome to this live currency strength indicator tables video. My name is John. I'll be taking you through the charts this Tuesday, the 10th of January. Here you can see we have the two currency strength indicator tables in front of us. We have the trend traders table and the day traders table. These are showing us the same studies but just highlighting different time frames. So our trend traders is our higher time frame and the day traders is our lower time frame. You can see here some of the currencies are highlighted in green. That means there is a confluence between those two trading time frames, and that's where I'll focus some attention in these videos. The tables auto update every 15 minutes 24/7, so our members can log in at any time, day or night, from anywhere in the world and see exactly which way the markets are moving in real time. So what are the trend and day traders tables telling us today? Well, it's telling us that the Australian dollar is S1 on the trend traders table, which is followed by the Japanese yen, which is S2, which is then followed by the Canadian dollar, which is S3. On the weak side of the trend traders table, the US dollar tops it at W1, followed by the Great British Pound at W2, followed by the New Zealand dollar at W3. On the day trader side of things, the Australian dollar remains the top at S1, followed by the euro at S2, followed by the New Zealand dollar at S3. On the weak side of the table, the yen tops the table here, followed by the US dollar at W2, followed by the Swiss franc in W3. So the only highlighted currency pair of today is Aussie US dollar, but I have looked around the other pairs as well and I've spotted a potential opportunity forming on Kiwi dollar as well. So I'm going to start there and then we're going to jump back to Aussie dollar because we did feature Aussie US dollar and New Zealand US dollar in yesterday's video, but I'm going to go into a little bit more depth on both. So let's jump into Kiwi US dollar first. Why would we be interested in Kiwi US dollar? Well, we can see that the price of Kiwi has recently come back into a key structure level, that being that 0.62 handle, and you can see how the weekly has closed off of that level. You can see we formed this wick to the downside, closed back to the upside. So that to me suggests that we could see a breakout to the upside here. We could see a move higher. You could also argue, if you are a sort of pattern trader, you could argue that we have a left shoulder, head, right shoulder here developing. So your left shoulder would be there, the head of the pattern will be down at the 0.5550 handle where we had all that support coming in, and then our right shoulder would be developing here at the 0.62 handle. Now if that's the case, then you would have sort of a neckline running through here which could then be broken, which could then see price trade up to the higher time frame trend line through here. So that could be something to watch out in the future, but for now price could be developing into the neckline area, which could see price trade to the 0.6450 handle, or even a move up to the 0.6550, as you can see that it's been support and resistance in the past. So if we go down to our lower time frame, I'm actually going to go to a trading time frame, which is one of our trading time frames, which is the 4-hour time frame, just to kind of show you what's been happening recently with price and why I'm looking at the potential opportunity for price to break here is because we found support at that 0.62. You can see the 200 moving average running through there as well. We had a very aggressive buying coming through in here, so lots of demand pushing price to the upside. We've then traded through multiple highs, so you can see these previous highs in here, 3 previous highs. Price has then traded through those and closed above. So in yesterday's video, this is what we were talking about. We were looking for price to close above these highs, and now we've achieved that. What I'm looking for is price to pull back into this area here, which is what we marked out yesterday, find support and then trade to the upside here towards that 64.50 handle. Now if you are a trend based trader, you would be looking at this and potentially looking at setting a buy stop order above these highs in here with your stop loss below this low, looking for targets being that 64.50 or even higher if you can see this sort of candle in here where there was a lot of selling pressure coming from in the past. Alternatively, as a day trader, what you would want to look for is a breakout. The reason being is if I go a little bit lower to the hourly time frame, actually let's just go to the 15-minute, just because you can see price is in a consolidative pattern here. Okay, so we've almost formed multiple ranges here. You've got kind of a range here, price has then broken out of that range, we've found support, and then price is ranging sort of between the 0 spot 63.50 handle and the 0 spot 63.80. So we're kind of trading between these two areas at the moment. So what I would want to see as a day trader is price trade out of this range, find support, and then continue to the upside. Also, it would give me a nice reward to risk ratio, because what that will do then is allow me to have a stop loss that's a little bit tighter, which could then increase the reward to risk. So we've got about 63 pips from the high of the range up to the 0 spot 64.50 handle. You know, if we could look at that, and it's about a 30 pip stop at the moment, if we could reduce that to around 20 pips, then we're going to have a really nice reward to risk ratio going on there. So that's what I would be waiting for from a day trader's point of view. You know, at 10 o'clock we're going to see the 4-hour close. So if it can close like this, it could then lead on to price pushing to the upside. If, however, we break lower, okay, because that can happen too, then price could come all the way back down to the 0 spot 63 handle. We could find support there. However, I do like the demand back down at 0 spot 62, because this is where those buyers have got involved already. So if we were to break to the downside, I would be more inclined to wait for price to come back towards the 0 spot 62 before looking for another sort of opportunity long. Let's jump onto Aussie US dollar then. So Aussie US dollar is the one that's featured on the tables today, and obviously we take our positions from what the tables are telling us. So we've got Aussie US dollar featured on both, with the trend traders being the top currency pair to watch. Now, yesterday we talked about waiting for a daily close above the 0 spot 68.75 handle. We have that now, so we could look for opportunities potentially to the upside here. Now, if I go to the 4-hour again, you can see that why I'm interested in price is because we've made a new higher high. So naturally what I would want to look for is a new higher low. Now, price at the moment has come back into this previous high in here and has found some support. You can see all these wicks to the downside there. That could suggest that maybe, you know, buyers are willing to buy up at lower prices, and that could then trigger a move up to the upside. Okay, so that could be something to be aware of. What I have done on the hourly time frame is just popped in a little trend line here, so you can see I've got a trend line. The reason being is because at the moment on this hourly time frame, the price is technically trending to the downside. We've got multiple lower highs here, multiple lower lows. So what I would want to see is that broken through. So if we could see price trade out of these highs here and close above, that would be a really significant move, and I think that would then kickstart the move to the upside here for Aussie US dollar. Alternatively, we could still continue to the downside, because the 0 spot 68.75 handle is the key area to watch, as price has recently been around this area and found resistance in the past. So we could still dive a little bit lower before punching to the upside. But if we do move higher, we've got a trend line resistance to be aware of at the previous highs here, 0 spot 69.50 handle. But ultimately I want to be targeting the 0 spot 7, or like we discussed yesterday, the 0 spot 71 handle, which if I go back to the daily time frame is around about these highs just through here. Okay, so that's what I'll be looking for on Aussie US dollar, if we can break out of that level and continue to push to the upside there. So I hope you enjoyed that video. Remember, if you are a member, you can log in at any time, day or night, from anywhere in the world, and you can see exactly which way the markets are moving in real time. You'll get an update every 15 minutes, 24/7. So please be aware of that. As a member, you can log in at any point. Thanks for watching this video update, and I look forward to speaking to you in the next one.